Hello, good morning to all and happy Friday. I'm Kelvin here again. Very good morning. Welcome to today's Daily Dose of Market Insights. Today will be Friday, the 16th of May, 2025. So as usual, before we kickstart our Daily Dose of Market Insights, let's have a quick review on the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, before we jump straight into today's intraday technical outlook on those broad-based cross-asset classes ranging from the major dollar pair, the major stock indices, and as well as the two key commodities market, gold XAU/USD, and as well as the West Texas crude oil. Let's have a recap of what has taken shape yesterday in terms of news flow, economic data release, and as well as their impact on their respective price action movement on the intraday basis for those broad-based cross-asset classes. All right, so let us start with the economic data out yesterday first before we jump straight into today's economic data, which is the Japanese GDP numbers that is out around 7:50 a.m. Singapore time. So yesterday's data will be primarily focused on the European side of the story. So what we could see is that we do have preliminary Q1 GDP numbers up in UK. So for UK, the numbers actually came in better than expected, both on a Q-on-Q basis and a year-on-year basis. So Q1 preliminary GDP growth rate on a Q-on-Q basis grew by 1 basis point better than expected, 0.7%. Q-on-Q versus what market is looking at is 0.6%, and also surpass above Q4 2025 print of 0.1%, and also on a year-on-year basis that's smooth out this the seasonal effects, also grew 1 basis point better than expected by 1.3% versus 1.2% on the consensus. So that also causes the sterling dollar to actually rise against the sterling to rise against the USD as well. So with that, we start to see the dollars weakening against the major currency pair. We could see over here. Okay, I don't know why is it not showing. Give me a minute. Let me refresh the chart for you guys. Okay, I'm not sure why is it not showing. Oh gosh, what happened? Okay, let me refresh it. Cancel. Okay, let me refresh the chart. I'm not sure what is going on. It seems to me there's this internet connection that's cut off. All right, give me a couple of seconds. Hopefully I'm able to bring that chart out for you guys to see the broad-based dollar sell-off yesterday. Okay, good. Finally it's out. Okay, so what you could see, this is the 5-day rolling performance yesterday. So what you could see is that the dollar continues its weakness or decline against the other major currency, where the dollar is the third weakest against the sterling, down by negative 0.22%. And this is being kind of reinforced by the strong I would say the better than expected print of UK Q1 GDP data. All right, and now stretching forward into the US session, we have a cost of goods being produced in the US, so that's considered as factory gate prices. So PPI month on month actually slumped to a negative territory of negative 0.5% from 0%, and also way below expectation of positive 0.2%. Okay, that's on a month-on-month basis. this particular sign doesn't show really signs of deceleration in inflation pressure in the US. Why? Because if you look at one particular news flow over here, Walmart is actually a key wholesaler, or a kind of a, put it away, that retailer that is selling consumer staples product to US citizens, or in the US, where people need to purchase, we call it such consumer staples. And Walmart yesterday actually warns that there could be potential price hikes on their product. Right, so we know that Walmart is being a consumer staples, and Walmart is one of the key we call it a supermarket chain in US, where US consumers will rely their purchases on consumer staples. Okay, consumer staples and consumer discretionary is different. If consumer discretionary product prices increase, consumers may choose not to demand for them. But consumer staples product, which Walmart is offering, we're talking about fresh foods, we talk about your daily necessities, consumers still need to buy this product because for their daily needs. So Walmart warns that price hikes are coming due to Trump tariffs. So that being said, over here is that because Walmart being a major US retailer, they are no longer able to actually absorb the higher costs of businesses. And right now, there is a high chance that they may start to pass on these costs to US consumer. So that actually imply that US inflationary pressure is actually not falling, and in fact, there's a big risk that it may continues to rise in the months ahead, and that is already being picked up by market transacted inflationary expectation by the 5-year break-even rates and the 10-year break-even rates. So the 5-year break-even rates and the 10-year break-even rates over here, which I highlighted in my yesterday's daily dose, right? The dark blue line and the light blue line. So the dark blue line is the 5-year break-even, and the light blue line is the 10-year break-even, and both of them continues to rise yesterday as well. So the 5-year break-even inches up to 2.41%, and the 10-year break-even inches up to 2.34%. So that actually implies that market transacted gauges. So this 5-year break-even and 10-year break-even is based on the implied calculation from the market transacted prices of US Treasury inflation protection bonds. And from there, we are able to have a gauge what market is expecting on inflation trends 5-year from today and inflation trends in the US 10-year from today. And in fact, they are not falling, and they starts to rise, and and their rise has just kick-started from the middle of April this year. All right, previously there was a slide, and after that, from around the middle of April, both of them actually starts to shape that bullish reversal. So that also taking into account of that news flow where Walmart has warned publicly that they may no longer able to sustain higher costs of business input, and to maintain their decent net profit margin, they got to actually increase their products and pass on to US consumers. So that actually explains the rise in inflationary expectation in the US. All right. And also one part, then with that, now let us look at the that actually causes that actually causes a kind of lackluster movement on the Nasdaq 100. So the Nasdaq 100 actually kind of underperformed against the major US stock indices yesterday. So almost unchanged on the Nasdaq 100, 0.08%. Still recall that Nasdaq 100 yesterday we were bullish, and there's a resistance level to watch, which is 21,400. So if you look at the Nasdaq 100 yesterday, it hit the 21,400 before selling off in the later part of the US session. And in the half-hour mark, there are actually buyers coming in to push up the price of the Nasdaq 100 again. So later I'll share with you what is the intraday technical outlook on the Nasdaq 100 when I cover the second segment of today's daily dose. And what's interesting over here is that still recall that prior to yesterday, that means we talk about Wednesday, we do have a bearish bias on the Dow Jones Industrial Average because of the weak momentum in the healthcare stocks. triggered by United Healthcare being the top 3 major component stocks in the Dow Jones Industrial Average, and because yesterday the fall has already hit a minor support level, which I highlighted on the US Wall Street 30 at around the 41,700 mark yesterday, and thereafter we flipped to a bullish buyer's stance on the Wall Street 30, which is representing the Dow Jones Industrial Average in our platform. The Dow Jones indeed outperformed yesterday by a positive 0.65%. So the Dow Jones was the outperformer yesterday among the 4 major US indices. The Russell 2000 up 0.52% and the SPX up 0.41%. And also the reason why Nasdaq underperformed is because most of their stocks are we call it the higher beta stocks are sensitive to this inflation expectation on the up move, and that could actually create a higher cost of funding in the US economy, and that will potentially climb down or put a pressure on their net profit margin. And also yesterday there is specific news flow that hit one of the mega cap technology stocks in the Nasdaq 100, which is Meta, Facebook. So Meta shares slipped yesterday due to report that it's delaying its flagship AI model. So that also created a negative feedback loop into the other mega cap technology stocks as well. Pretty much evidence, but if I share you the heat map of the S&P 500 yesterday, where we start to see a sea of red in the mega cap technology stocks yesterday. Right, give me a minute. So what you see is that Meta is down negative 2.35%, and that has a negative spillover to other mega cap technology stocks like Google negative 0.84%, Amazon negative 2.42%, Apple negative 0.41%, almost unchanged on Microsoft. But and Nvidia previously the last 2 sessions was rather bullish because of US semiconductor companies able to actually get more business from Middle East in the last 2 weeks of US administration meeting with key Middle East country that we call it cemented this deal. So Nvidia profit taking negative 0.4% yesterday. Then thereafter we start to see a sea of green in other related sectors of the S&P 500. All right, so that is the intraday performance on the major US stock market or stock indices in relation to the respective news flow that I share with you guys. And also yesterday we have the release of Q1 earnings result on the one of the major China big tech players, which is Alibaba. So Alibaba, in contrast with Tencent and JD.com, that managed to beat expectation in terms of their revenue and earnings, but Alibaba numbers came in softer than expected. So Alibaba quarterly revenue only grew by 7%. Over here, missing estimate. So that actually causes the Hang Seng index futures, the HSI futures, to actually slip further in the red in yesterday US session. And still recall that yesterday we flipped to a intraday bearish buyer stance on the Hong Kong 33, that representing Hang Seng Index, that also being reinforced by this weak earnings of Alibaba. And right now there is a negative spillover on the intraday basis. As you're speaking, the Hang Seng Index is down by negative 0.7%. The Hang Seng Tech is down by negative 0.52%. But interestingly, we know that the Hang Seng Index is still in a medium-term uptrend phase, and perhaps right now the fall that is being triggered by Alibaba has really led to some support level that's being made, and that could potentially attract deep buyers coming back into this indices. So later I'll cover much more when I cover the intraday technical outlook on the Hong Kong 33 representing the Hang Seng Index in our platform. All right, just bear with me for a while and I go through the first segment of today's daily dose. And also what's interesting over here is that I want to highlight is gold price as well. So gold price, you still recall that yesterday we do have a bearish bias, but this bearish bias is coming very close to a key support level over here, which is the, where is the gold? Yeah, the daily chart of the gold, which is the 50-day moving average and the lower limit of this medium-term ascending channel that I drew from the low of 30th of December 2024. And yesterday there's a strong positive price reaction right exactly at the confluence of these 2 different support level that is being defined by 2 different way graphically. and as well as mathematically, which is the 50-day moving average at the 3,133 level, which is our support level as well, where we have a bearish bias yesterday. So this push up in gold XAU/USD yesterday, after hitting of our bearish view, hitting the support exactly that we pre-mentioned in our daily dose yesterday, was led by the fact that there could be a uptick in geopolitical risk tension again. So we know that gold itself, positive factor of gold can be driven by lots of things. Number one, stagflation risk in US that is still pretty much intact because of the inflation expectation is still picking up. Walmart is warning going to rise its product prices, despite the fact that yesterday PPI came below expectation and slipped into negative territory, but that is backward looking. And also gold will also tends to benefit. That means gold prices also tends to rise. Also, if there is an uptick in geopolitical risk premium, and this uptick in geopolitical risk premium is due to this ongoing hot and cold relationship between Russia and Ukraine. And we know that at the start of this week, there could be a potential ceasefire between Russia and Ukraine. Why? Because Putin finally decided wants to meet the current Prime Minister of Ukraine, Zelensky. But however, this potential ceasefire prospect has dimmed, and right now there could be potential new sanction that is going to be hit on Russia. Why? Because Putin decided not to meet face to face with Zelensky, who is the Ukraine Prime Minister, this particular weekend in Turkey, and instead he decided to send a low-level delegation in talks with Turkey. So that actually the latest action by Putin signified that he doesn't seem to be in a serious mode of negotiating a ceasefire deal with Ukraine. So that actually causes geopolitical risk premium to increase and reinforce that technical movement on the bullish side of the story after the corrective decline of gold XAU/USD hit the 50-day moving average, and as well as the medium-term ascending channel support, both of them confluencing at around the 3,133 level, which is our support level yesterday in our short-term intraday bearish bias. So later I'll share with you what is the intraday technical outlook on gold XAU/USD. And also oil prices continue to fall as well. So if you look at oil price yesterday, we do have a bearish bias right below the 50-day moving average. All right, over here, I think as a resistance. So for 2 consecutive days, oil prices going to fall. Yesterday, the West Texas crude oil extended its losses to negative 1.9%. Why? Because yesterday, Trump mentioned that US and Iran are getting closer to a deal regarding Tehran's nuclear program. So if this is successful, that could potentially unleash Iran oil into the oil market, which is now rapidly approaching a glut due to OPEC Plus insistence of increasing production heights rather than production cuts. So that could further increase oil supply into the oil market and potentially lead to a much more bearish sentiment on oil price. Okay, and also in today's data release is on the Asia session before we start our daily dose today is Japan Q1 GDP. So the Japan Q1 GDP actually fall worse than expected. So on a Q-on-Q basis, this is the preliminary figure or the flash reading for Q1. Market is expecting negative 0.1%, but it fell negative 0.2%. And also on the annualized basis, it fell negative 0.7% from what market is expecting of negative 0.2% and way down below the previous quarter of 2.4%. So if you look at the annualized trend of the Q1 GDP, okay, give me a minute, let the thing roll on first. One second. So I don't know why is it so slow. It's not loading up. All right, so this marked the first yearly decline in almost a year as private consumption remains subdued, posting its weakest growth in fourth quarter. Right, so if you look at the 5-year trend, all right, it slipped into the negative territory. So despite the fact that GB growth analyzed on an annualized basis and quarterly basis contract worse than expected, this doesn't stop the dollar weakness against the yen over here. So initially we thought the fact that with a weaker Q1 Japanese GDP was expected, BOJ will be potentially less hesitant to continue its gradual normalization of interest rate hike policy, and that could potentially push up the dollar yen. But dollar yen is not showing any signs of bullishness right now and continues to be written rather subdued. That means the dollar strength is rather subdued against the yen, and in fact the dollar is the worst performer against the yen based on the 5-day rolling performance as of today, 16th of May, and it's currently down negative 0.4%. All right, so that sum up the first segment of today's daily dose. So let us now move on to the second segment of today's daily dose, which is the intraday technical outlook on the broad-based cross asset classes, starting with the FX market. So let me expand my screen. All right, over here. Okay, good. So now let us start with the FX market first, which is the euro dollar. All right. Okay, so for the euro dollar, it continues to trade sideways yesterday over here. So what we could see over here is that potentially today is Friday already. So given that this sideways trend lasted for almost 2 days in a row over here. So given that it's Friday, there could be not much trajectory going into play. So for now, I would stay in a neutral stance for today, neutral between the pivotal support that we have, which is 111 1.1111 figure in the last 2 days. So we flip to a neutral stance for today. Okay, give me a minute. Let me remove that short-term pivotal. Okay, it's a bit slow today, the internet. Okay, it's not showing up. Gosh. Okay, give me a minute. Okay, let me move this up. Okay. Okay, so we flip to a neutrality stance between 111 figure and 1.2880 slash 11330, given that the price action starts to be sideways in the last 2 sessions and it's Friday right now. So given that today is there also not much key data coming out, potentially it may just drift in this sideways range for today's US and European session. So that's for the euro dollar. Next up will be the sterling dollar. So sterling dollar continues to be in a much more firmer bullish setting as compared to the euro dollar, as it continues to inch higher with a very clear higher low that has started to form over here. All right, so with that, it still can't break above the 20-day moving average, which is 13320. So I don't want to tighten my short-term pivotal support level to be so tight to 132.50 level, which was the first support level. So still use 132.50 level as my first support. Pivotal support will be at 132 figure. So as long as 132 figure holds, we'll still maintain that intraday bullish buyers stance for the next resistance to come in at 134.20 for today. However, if price action starts to break down below 132 figure level with an hourly close below it, today's intraday trend bullish buyers will be invalidated on the sterling dollar to see a slight exposing 131.20, which is the 50-day moving average, I think as a support level as well. Only a breakdown below 131.20 may see the extension of a minor corrective decline sequence unfolding. That means extending it from the high of 29th of April to expose the next near-term support level at 130.50 in the first step. So i.e. in a nutshell, given the positive price movement on the sterling dollar, we'll still maintain that intraday trend bullish bias using 132 figure as my short-term pivotal support level for the sterling dollar. Next up will be the Aussie dollar over here. So for the Aussie dollar, it continues to trade sideways, but managed to find some support at the 64 figure level. Hourly RSI continues to remain supported above this parallel ascending trend line as well, and right now is attempt to actually go back the break above the 50 level mark. So if you look at the hourly RSI, if I do a trend line resistance, okay, it broke above this parallel descending trend line resistance as well, and going above the 50 level, so indicating that short-term intraday bullish momentum is still intact on the Aussie dollar. So with that, still maintaining that intraday trend bullish bias within this kind of very sideways choppy range configuration on the Aussie dollar, using 64 figure as my short-term pivotal support level. First resistance level to watch for today will be close to the 200-day moving average at this 64.60. Above 64.60 may expose 65.15 next. Only a hourly close and a push down below 64 figure level that would negate today's intraday trend bullish bias to see it floating down to the bottom of the range support level that is in place since 16th of April, and so confluencing with the 50-day moving average at 63.60/63.30. All right, so i.e. still maintaining that intraday trend bullish bias within a choppy sideways range configuration for it to go up to the upper limit of the range using 64 figure short-term as a short-term pivotal support on the Aussie dollar. All right, next up will be the dollar yen. So the dollar yen continues to slide lower as expected and already hit our support level at 144.95. Hourly RSI also showing no signs of a bullish reversal as price action continues to trade to print out a series of lower high lower high below the 50 level mark. So with that situation over here, the price action also trade below the 50-day moving average right now, what we could see at this point in time. So with that, I would actually maintain that intraday trend bearish bias for the dollar yen. So I will now use a tighten short-term pivotal resistance level, which is close to the 50-day moving average, and as well as this minor congestion area here that got rejected yesterday on before the start of the US session, before it traded lower at the 1.4 uh, yeah. Test, test, test. Test, 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 test. Okay, I think it's back. Yeah, hopefully the screen is back and my audio is okay as well. Right, sorry guys, because I think there's some internet connection over my end. So let us now continue. We left off with the dollar yen, right? All right. So the dollar yen over here. All right, good. So the dollar yen, what we're going to do is that we know that the dollar yen continues to slide at this point in time, and also the momentum indicator on the hourly RSI continues to display a series of lower high right below the 50 level mark. So indicating that there is still bearish momentum intact despite the fact that it hit our support level at the 144.95. That means potentially the dollar yen could inch down much lower. So with this bearish momentum that is still intact on the dollar yen, I would actually tighten the short-term pivotal resistance level for today at the 14720 level. All right, so let me put this in writing. Right, so hopefully I can able to write it down over here. Okay, give me a couple of seconds for the text to get back. Right, so I can write that number down for you guys to see. Okay, give me a couple of seconds to get it moving. Okay, good. 14620. Okay, so that will be my short-term pivotal support for today, a Titan one. Okay, so this will be the next support, next resistance, which is not a pivotal resistance anymore. Okay, let me delete this instead of waiting for it to come out. Okay, 14705. Okay, delete, delete, delete. All right, so to repeat everything, bearish momentum still remains intact on the dollar yen. So we will still maintain the intraday trend bearish bias for today using a tightened short-term pivotal resistance 14620 below 14495 exposes the next near-term support at 14410, which confluence with the rising 20-day moving average. Only a push up and an hourly close above 14620 will invalidate today's intraday trend bearish bias to see a squeeze up to revisit 14705 and 14775. All right, so that's for the dollar yen, and also sum up the intraday technical outlook on the major dollar pair. So now let us turn our focus to the major stock indices, starting with the Hong Kong 33 representing the Hang Seng Index. So still recall that the Hong Kong 33 yesterday we do have a bearish bias, but our bearish bias is not the start of a multi-day or multi-week bearish reversal, but rather a minor corrective pullback within its short-term uptrend phase that is still intact as it continues to trade within the minor ascending channel that I drew from the low of 16th of April over here. So with that, price action now is coming very close to the lower limit of the channel, which is the minor ascending channel support at 22,970. So I will use a slightly lower pivotal support level at 22,680 to flip back to a intraday trend bullish bias on the Hong Kong 33 representing the Hang Seng Index. Next resistance level to watch 23,740, which is the minor swing high that is being formed on Wednesday. Above 23,740 exposes 23,970 slash 24,040. Only a bearish breakdown and the hourly close below 22,680 will invalidate today's intraday trend bullish bias to see the extension of this minor corrective decline sequence extending to the downside, exposing the next near-term support level at 22,380, which confluence with the rising 20-day moving average. So i.e., in a nutshell, flipping back to a intraday trend bullish bias because the corrective pullback of yesterday has already been met its support level using 22,680 as my short-term pivotal support for today on the Hong Kong 33. Next up will be the Japan 225. So the Japan 225 continues to inch down lower as expected, break below the 200-day moving average, or I would say reintegrate below the 200-day moving average and break below the former ascending channel support. Now turns into a pullback resistance that I drew from the low of 10th of April at 37,925. So using a tightened short-term pivotal resistance at 37,925, we will still maintain our intraday trend bearish bias for this ongoing corrective decline sequence to extend towards the downside for the Japan 225 representing the Nikkei 225. First support level to watch 37,280, a breakdown below 37,280 exposes 36,630 next, which confluence with the 20-day moving average. Only an hourly close and a push up above 37,925 that would invalidate today's intraday trend bearish bias to reinstate the bullish tone for the start of a brand new impulsive up move sequence, exposing in the first step the next intermediate resistance at 38,460 followed by 38,850. Next up will be the Germany 30 representing the German DAX. So Germany 30 yesterday we flipped to a neutrality stance as price action starts to drift in the sideways range after a Monday push up. This Monday push up. So continues to maintain that neutrality stance as price action on the hourly RSI exit from the overbought level. So maintain our neutrality sideways stance for today on the Germany 30 between 23,790 and 23,380. Only an hourly close and a bullish breakout above 23,790 will trigger off a minor bullish breakout to reinstate the bullish tone to expose the next near-term resistance level at 24,170 slash 24,190, which is a brand new fresh all-time high being defined by a Fibo extension clustering technique. So that's for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 managed to bounce and almost hit our first resistance at 42,480 over here. So with that, I will use a Titan short-term pivotal support for today, which is yesterday's European session low at 41,770 over here. So as long as 41,770 short-term pivotal support holds, a breakout above 42,480 thereafter may expose the next intermediate resistance coming in at 43,085, which is the one-time 1.236 Fibo extension from the low of 8th of April, and as well as the minor congestion area, the minor swing high area of 4th of March and 6th of March. Only an hourly close and a breakdown below 41,770 Titan short-term pivotal support for today that would invalidate today's intraday trend bullish bias on the US Wall Street 30, representing the Dow Jones Industrial Average, to see another round of minor corrective pullback, exposing the next near-term support level at 41,350/41,135, which confluence with the 50-day moving average as well. Lastly will be the Nasdaq 100. So the Nasdaq 100 managed to hit our first resistance at 21,400 level, but showing no signs of a bullish exhaustion. Hourly RSI managed to shape a higher low over here and managed, right, indicating that some form of bullish momentum still remains intact. So first support level to watch, 21,180. I don't want to use 21,180 as my pivotal support level. It will be too tight. So pivotal support level will be at 20,900. So as long as 20,900 short-term pivotal support holds, we'll still maintain that intraday trend bullish bias on the Nasdaq 100. Next resistance to watch will be at 21,750, which is the 1.382 Fibo extension taken from the low of 22nd of April. Only an hourly close and a bearish breakdown below 20,900 that would negate today's intraday trend bullish bias to kickstart of another round of minor corrective pullback sequence, exposing 20,690. A breakdown below it may see 20,390 coming in next, which is also confluence with the 200-day moving average as well, I think as the similar support level. All right, so that's for the Nasdaq 100. Next up will be the commodities asset classes, starting with gold XAU/USD. So for gold XAU/USD, yes, yesterday we do have a trend bearish bias, but we watch out at the 50-day moving average, where we warn that the prices may start to shape a bullish reversal, which indeed it takes shape. After that bullish reversal, right now is actually kind of moving off its extreme its overbought level, and now it's about to retest the 50 level mark again. So first support level to watch out for will be at 31.84, which is coming very close to it, but I do not want to use 31.84 as my short-term pivotal support level. So short-term pivotal support level will be the V-shaped recovery that took shape yesterday at 31.30. So using 31.30 as my short-term pivotal support on gold XAU/USD, we will flip to a intraday trend bullish bias for today for a further potential recovery. Next recovery near-term resistance level to watch will be 32,991, which is very close to a 20-day moving average. I think as a similar resistance level as well. Above 32,91 may see 33.60 coming in next. Only a bearish breakdown below 31.30 will invalidate today's intraday trend bullish bias to see a further slide to expose the next near-term intermediate support zone at 3086/3055, which is so close to the medium-term ascending trend line that I drew from the low of 31st of December 2024 low. Right, so that's for gold XAU/USD. Lastly will be the West Texas crude oil. So as I mentioned, West Texas crude oil continues to remain soft after that potential Trump announcement of that US-Iran deal that could unleash Iran oil into the oil market. So West Texas crude oil yesterday, it break down below the minor ascending trend line that I drew from the low of 5th of May, now turns into a pullback resistance at 62.47. So I'll be using a Titan short-term pivotal resistance for today, 62.47 for West Texas oil, to maintain that intraday trend bearish bias for West Texas oil. First support level to watch 60.35, a breakdown below 60.35 exposes 58 figure next. However, only an hourly close and a push up above 62.47 will negate today's intraday trend bearish bias to see a retest on 63.88, which is the 50-day moving average. acting as a similar resistance level. Only an hourly close and a bullish breakout above 63.88 will validate a potential continuation of that counter trend rebound scenario to play out, exposing the next near-term resistance level at 65.40 next, which is the minor swing high area of 23rd of April. All right, so that sum up today's intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for in today's European session? In today's European session, we do have ECB official speaking, Silpon at 3:30 p.m. Singapore time, and thereafter will be rather quiet. So no tier 1 economic data for the US until 10 p.m. where you have the flash Michigan consumer sentiment data, which is very important because that represents a leading consumer spending in US. All right, given that consumer sentiment always lead the actual consumer spending. So that will be out at 10 p.m. Singapore time. Market expecting a slight improvement to 53.4 from the previous April print of 52.2. And also market will be paying close attention to the 5-year inflation expectation, part of the consumer sentiment survey data as well, and as well as the 1-year inflation expectation. All right, so that will be out at 10 p.m. Singapore time, and 11 p.m. Singapore time there will be another ECB official speaking, ECB Lane. And as we head into the early Saturday hours of Singapore time, no key data. All right, so with that, let's sum up today's daily dose of market insight. Do have a great weekend ahead, and we shall speak again on Monday. Thank you.